Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, May 4th through Friday, May 8th, 2009. Last week can only be summarized in a few short sentences, folks, and it's unbelievable, unreal, volatile, whippy, light volume. All those can be terms that we described last week, and I want to cover a little bit on what happened last week. Then I want to jump ahead to what we expect and what we could see based on the technicals, based on the psychology, all our little connections between price pattern and time and technical analysis, trend line analysis that we focus on. All right, what you're looking at right now is the spiders, the SPY, giving us a good 10-minute view. Each candle is 10-minute on this chart. You can see here your 20 moving average, your 50 moving average, and your 200 moving average down here. Each line here is very, very significant based off of our technical trend line analysis techniques, where we've basically come up with the key lines that work out very, very well, understanding where the market will go to, where it will bounce, where it needs to close above or below, either to break up or down. Now, again, as I mentioned, last week was really an unbelievable week, and just to summarize, the Dow ended on a positive note last week, up 44 points, the Nasdaq up about 2 points, and the S&P 500 up 5. For the week, it was a positive week, actually the 8th straight up week on the Nasdaq, getting a little overdone in my opinion, but nonetheless, you have to respect the light volume trade, and this is what's kind of been eating away at my mental capabilities here and understanding what's going on with the market, because what we've been seeing last week, and I want to point this out, is very, very light trading volume, in which case the market's able to float up. And now this is the key kind of philosophy or kind of knowing and understanding thing that you have to do. Understand that when you have light volume, it's human nature to be positive. So light volume enables the markets to generally float higher. It's not 100%, but generally when you have light volume, as we preach in our intraday chat, in our research center videos to our premium subscribers, that is what you see. And that's pretty much what we saw last week. And whenever the market seemed to come into a period where you had a down move late in the day, somehow, miraculously, by the end of the day, they flushed it up, whether it was a Goldman buy program that came in, whether it was ExxonMobil buy program, it didn't necessarily matter. Otherwise, ultimately it floated the market up, and that's what we saw. Now, my one worry is this, folks, and I'm going to go into a little bit of a sermon before we get into the technicals, but I'll do it very quickly. Next week, this is key, they postponed the stress test results until Thursday. Now, why did they do that? Well, they said it was because a lot of banks didn't necessarily want to, they wanted to kind of discuss and they were disagreeing on the stress test results, which is fine. I happen to believe there's a couple little other things at work here. Number one, in general, the administration, the Treasury, the Federal Reserve, they know that the market needs to stay up. When the market is up, people go out and spend. When their 401ks increase, people go out and spend. All right, so it's very key that the markets stay up as long as they can. Now, the one little facet you've been seeing of late, and I can show you any of these days on light volume, look at the buy programs that come in. Now, for instance, you can look right here, buy. You can look at the end here, buy program in the last half hour. Same thing on Friday. Look at this jump. Now, what you're seeing here is the light volume effect taking place. Now, look at the very, very light volume. We had an extremely light volume on Friday. What this enables is a buy program, whether it's computerized, led by Goldman, whether it's computerized, led by another major firm out there, or, a lot of people believe in the PPT. I don't want to get into that for the most part, but in any case, what it enables is the markets need to close higher. You almost always want the market to close higher on a Friday. Why? Because when do people do most of their spending? On the weekends, right? So if you think about it in a psychological aspect, if the market was down 500 on Friday, how many of us would actually be running out to Best Buy or running out to Bed Bath Beyond or Walmart to do our shopping, or to the malls to do our shopping when the market just got crushed and we're a little nervous, right? So it's very key when the light volume's there, especially on Fridays, for them to close this market up. And what you saw here on Friday afternoon is actually a little bit of a sell-off, and then right into the close, a little buy program came in. Now, this buy program was generally led by ExxonMobil. Now, ExxonMobil we refer to as one of the market leader stocks. All right, Exxon, Goldman Sachs, absolutely number one here on those two stocks. Now, look at what happened to Exxon. Exxon selling off. All of a sudden, last half of an hour, what a move. All right, notice how it comes out of the blue. All of a sudden, out of the blue, beautiful move up. Same thing with Goldman. Goldman, not quite as much, but the same sort of buy program comes in here in the last half an hour of the day, lifts the markets up. Now, on the spiders, they actually closed this positive above this purple line. Now, this purple line I'm going to explain to you in a minute what's so significant about that line. We're going to talk a little about that, and I'll do my best to kind of express to you what that means in terms of technicals. Okay? Now, the other thing I wanted to mention here is we talked about the stress test being moved from Monday to Thursday. Why is that significant? Well, Mondays and and Fridays lately have been very light volume. You've seen a hangover from the weekend on Mondays. You've seen a hangover or week going into the weekend slow volume on Fridays. I can show you here. Volume was extremely light. If you go back to last Friday, same thing and same thing. If they had released the stress test on Monday, you're going to see them basically after the stress test is done, trading will resume normally for the most part, all right, unless they have another, rabbit to pull out of their hat. So by pushing it off, what it's going to do is make volume on Monday light, generally light, unless we have some surprise announcements, which I don't think is going to come. But nonetheless, volume on Monday light. Tuesday volume and Wednesday volume will be generally lighter because everyone will be on hold until the stress test. Thursday, until that stress test is released, whenever it's released, will be light. Whether it's pre-market, then it'll be heavy volume. But what you're doing basically is controlling the volume for the week, keeping it light. Thursday you'll have heavy volume, but then Friday comes and lighter volume may kind of protrude here on Friday as well of the coming week. So I am a little nervous about that. All right, I think the markets overall are overbought. A lot of people out there are saying that, but with the light volume and maneuvering here, what the administration does and the Treasury and the Fed here for the stress test is be able to create these scenarios where light volume can be manipulated very well. All right. Now, again, I go out on a little bit of a realm, but I want to give you guys a little update and from my brain perspective and understanding psychology. When light volume's there, they can keep the markets up. When the markets are up, people are out there spending. It's helping to kind of get the recession faster over, if you know what I'm saying. When this recession, obviously, if people spend, it's going to be over. If they don't, it's not, and it's going to be on long-lasting one if we don't spend. So again, there's a lot of little interworkings here that are very interesting. Now, this purple line happened to be a high print from 2 Fridays ago. I'm going to go back and show you why this blue trend line is so important. All right, now let's go back here. All right, we'll scan back. There it is. So if you go back to the 17th of April, this was the high print. This was a Friday. Now, the Monday after, we had a huge drop in the markets. In fact, so much of a drop that it's hard to see down here. Let me see if I can get that into focus. There you go. There's Monday's drop. And ever since then, from the 20th, you never closed above the highs from this Friday until Friday. And that's something you have to be aware of, all right, folks? And I want you all to be aware of. This purple line is that same line, and now we finally, look, the previous days we traded much above them, but you actually closed below them each day. Over here on last Wednesday you traded above it, closed below. Here's your purple line. Thursday, you had the gap up. Where'd you close? You closed below it again. Friday, we were below, and then what happens? Buy program mysteriously appears here and closes us above. So you have to take that for what it's worth. I mean, that is something to watch now. Now, can we get back below it on Monday? That's going to be up in the air. Or do we continue? Now that we closed above it on an intraday level, does that mean we move up? If you do move up, you are going to have some resistance. You're going to have resistance right here at the highs from Friday, right at around 88.20. If you break that, this is your pivot high going back to last Wednesday, right there. That'll be your next resistance point on the upside, which is right around 88.35. And then ultimately the highs from Thursday on the 30th will be your next highs at around $89. Those will be your resistance points to watch early in the week. On the downside, you're obviously going to watch this purple trend line is key in my book, but then the white line here at 87.20, 200 moving average will slope up into that white line on Monday, probably meet it at some point during the day, and the pinkish line here at 86.90. Then below that, there's some support at 86.50 on the spiders, and then at around 86. So those are your levels you're going to come into next week. But again, I found it very fascinating that somehow on Friday light volume, they were able to get this market above that closing high on a technical level. That's something to pay attention to. Whether or not it means we go higher, I don't know. Could it be a fake out? Yeah, it could be. But what I do know is that the move of the stress test now is suspiciously, granted it was said because banks are kind of disputing them, but really, let's be honest, it's all about how are they going to communicate this, because it was a catch-22. All right, if they come out and say no banks fail, everyone knows it's a farce. No one believes it. If they say a bunch of banks failed, well, guess what? Then those banks get crushed like Lehman Brothers, Bear Stearns, whatever it may be. So the way what they're doing here is not only taking more time to figure out how can they present this to the market where it's going to be reflective and be positive, which again is kind of like, you're manipulating here a little bit, which I don't agree with. Give them the facts. Let's vote by the facts. Let's be open and honest. That's my policy. I want to make sure I'd like the government to do the same, and the Fed to do the same. It doesn't happen, obviously. But nonetheless, that's what they're doing, using the extra time to do that. In addition, it's going to work out, whether or not they knew this, and I assume they do because these guys are smart, it's going to actually work out so that they can keep the volume lower next week as well, in my opinion. But then the after week is Options X, which is going to be wild. So we'll have to see exactly how this plays out, guys. It's going to be really a fascinating week. A lot of the earnings are away. Cisco is next week for tech, but for the most part, all the earnings are out of the way that we wanted to pay attention to. Now it's on to economic numbers, and now it's on to the stress test and how the banks reflect, and we'll see exactly how that goes. All right, folks, that's all for this week's in market technical analysis. We'll talk to you next weekend or next week if you watch the intraday. Take care.